Mitch, once again, thanks so much for joining us. You and I have chatted about this before. There's a lot of confusion, Mitch. Consumer inflation eased a little bit last month, but the Federal Reserve is likely to still raise interest rates next month. What does this actually mean for those who are still concerned about the price of eggs?
Well, the interesting thing that eggs was in the middle of the story because this is the time of year where we buy more eggs. So I think it was good for the consumer between Easter and Passover. Those are two big egg consuming holidays, and the price was down. So certain items that give tremendous sticker shock to the consumer got cheaper. But an interesting thing that came in yesterday's Consumer Price Index report, the economists who produce it for the government break out inflation two ways. The overall inflation number, which has come down, and then they break out core inflation by taking out the more volatile food, which we were just talking about, and energy, gasoline, and so forth. Core inflation actually rose where the overall inflation fell, and I'm talking about, sort of the pace of the growth because it's still stubbornly high. And I think that probably has the Fed worried the most because core inflation is the thing that you and I feel the most. Just because eggs went down in price doesn't mean an airline ticket didn't go up in price or a new car price. So inflation's sticky and stubborn, and the Fed is going to continue, unfortunately, to raise interest rates to try to keep it in check.
Yeah, Mitch, then why is that happening? Because core prices have been stubborn to actually come down. Why are they not reacting to all the steps that the Feds seem to be taking with these interest hikes?
The interesting thing is what the Fed tries to do by raising interest rates is to get consumers, whether it be people like you and me or businesses, to stop consuming. What they try to do is destroy demand to get prices to fall. Let's remember why prices go up. It's too many people chasing too few things. That's what drives inflation. So they try to get the chasers to stop chasing them. And that seems to be the most stubborn, but because the consumers are not affected. But what they're doing is not great for the economy long term. They're loading up with debt, household debt, to continue to borrow money to buy the things that they want. So this doesn't reverse until the consumer stops buying. And if the consumer stops buying, we do find ourselves into that recession that we've all been worried about.
Mitch, is this the reason why grocery prices dropped for the first time in like more than 2 years? Is that the reason behind that decrease? And what can we expect with further decreases?
I think it's exactly, we're starting to see the leading edge of consumers saying, no mas, not doing it, not buying it. I'll buy the generic product as opposed to the brand name product. That's exactly what happened 40 years ago. I'm old enough to remember the last time we had inflation. And I think we're going to see consumers starting to back off more and more. Inflation will come down. But let's remember one thing. This report did not reflect the higher energy prices. Oil went from just under $70 a barrel to way over $80 a barrel when OPEC made its move, not reflected in the numbers. So I think, unfortunately, next month we're going to see a reversal and prices are going to be back up again in the report.
And is this why we just heard about the NBA and other big companies announcing budget cuts they're like preparing for these economic headwinds, right? And these inflation numbers seem to be positive. Is there a disconnect here?
Well, I can speak from firsthand experience. I live in Florida. I went to the Miami Heat game the other day, and boy, the tickets were really cheap. I couldn't believe how cheap a play-in game was. Why? Because people weren't buying them. So if that means that the NBA is losing revenue, what are they going to do? They're going to start laying off heads. That's exactly what happens. And I think, unfortunately, this summer could be the summer of layoffs.
Mitch, one more quick question for you before I let you go. Wall Street gained after Wednesday's Fed minutes were released. Now, what does that tell you? What can you expect in the outlook?
Yeah, I would not ever look at one day in the market too heavily, but I think what Wall Street read in the minutes, as did I, is that the pace of interest rate increases is going to slow, and the Fed is not going to be as aggressive in the future. So hopefully that part of the inflation fighting cycle is going to slow down a bit and let all of the interest rate increases do their work. And let's see what happens to the economy in the second half of the year.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.